Hello, welcome to the channel. In this video, we're going to contrast 7 ways that charities and businesses are different, because you need to be able to separate the sheep from the wolves. We're going to look at how they differ in their goals, legal structures, governance, accountability, tax and financial reporting. Now this topic's important because charities are important, and here are a few big numbers for you. There are over 168,000 registered charities, and they employ an astonishing 900,000 people, which is nearly 3% of the working population. I'm Paul Foden, the accidental expert. After a career of fortunate accidents, I spent the last 12 months studying charity accounting, unravelling the statement of recommended practice to allow me to design a new charity software product for my business, Aedon.Charities. Now, the more I've studied, the more I've understood the DNA of charities and businesses, and this is the knowledge that I want to share. You might be a trustee, a treasurer, or an advisor. You might be new to the role or just want a refresher. This video is designed for you, and there's plenty more follow-up material in the links below. Now, charities are not businesses. They're different in many ways. Now, firstly, what are the differences in their goals? Well, charities exist to serve the public benefit in areas like poverty relief, education, and environmental protection. Their primary goal is to fulfill their charitable mission. They are not interested in making money. Businesses, on the other hand, focus on profit for their shareholders. Their primary goal is on financial success and growth. How are they governed under law? Well, the Charities Act defines the legal requirements for non-profit organisations, and this is overseen by the Charity Commission. A board of unpaid trustees is responsible for governance of charities. Unlike directors, they are not allowed to take any benefits from this role. Now, the legal structure for companies is quite distinct. Companies rules are legislated under the Companies Act. Companies can come in various forms, from sole traders at the entry level, to partnerships and limited liability partnerships, to private and public companies. But all companies are registered at Companies House. In Cardiff, if they're English or Welsh, in Edinburgh, if they're Scottish, and in Belfast, if they come from Northern Ireland. As for management, companies are managed by executive and non-executive directors who are paid for their services. Moving on to accountability, charities have many stakeholders: trustees, donors, volunteers, and grant providers. They must demonstrate transparency and good governance in their operations. Businesses are accountable primarily to their shareholders and customers. They must comply with legal and regulatory requirements, yes, but their primary focus is to their shareholders. So where do each of them get their funding? Charities can receive their income in several different ways. Donations, grants, and trading income are the 3 most common. Now, all income must be separated according to the donor's wishes. If a donor puts a restriction on their donation, it must go into a restricted fund, with a separate restricted fund for each purpose. If there are no special conditions, the money can go into a general fund. Equally important, when any money is taken out, it has to be taken from a specific fund and applied to a particular activity. Effectively, each fund becomes its own mini charity. Fund accounting is complicated, so there's a lot more to say, so I have a separate video on the topic. Companies are generally funded through shares, typically ordinary shares. These might be supplemented later with loans where the business is less risky, but thereafter businesses generate revenue through the sale of goods and services, although occasionally they too receive government grants and support. Turning our attention to tax, charities are treated quite kindly by the tax law. Not only are they exempt from corporation tax, they pay only 20% of the business rates. Even more generously, donations from UK taxpayers are increased by 25% to the gift aid scheme on completion of a simple declaration. However, trading income over £85,000 is subject to VAT, which, combined with the same rates of national insurance, as businesses creates a more level playing field. UK businesses pay 25% corporation tax, which is slightly higher than the OECD average. Business rates are a sore point for many. Not only are they high, but they make it much harder for bricks and mortar retailers to compete with the online players and charities, which is why you see so many of them on the high street. Finally, let's look at financial reporting. We'll start with the companies because their financial standards are the foundation. FRS 102 is the main UK accounting standard for companies not listed on the stock exchange. It aims to provide accurate, transparent financial reporting that provides a true and fair view of the company. The Charity Statement of Recommended Practice, the SORP, layers 200 pages of additional complexity on top of the FRS 102. It is very prescriptive about what information is required and how it should be presented. Now, there are 5 key elements to the SORP of which you should be aware. The Trustees' Annual Report provides a narrative overview of the charity's performance for the year. The Statement of Financial Activities replaces the traditional profit and loss account, categorising income and expenditure by fund and activity. The charity balance sheet and cash flow are quite similar to ordinary companies with minor changes. Finally, the disclosure notes prescribe a lot of detailed information that is specific to charities, such as the treatment of heritage assets, like Spitfires, if you're lucky enough to own one. Also, you need to know that the charity SORP is changing. A new version is coming out in 2025. I will be attending the final review roundtables and will update you on progress. Before we finish, I must touch on the reason why I had to learn all this material in the first place. I'm the CEO of Aedon Accounting, and we're a finance software company built on the excellent Salesforce platform, if you know of that. We've just launched a specialist charities version of our product called Aedon.Charities, and I had to unpick the Aedon.Charities SORP in order to design it. Now, if you like the content of this video, you might like our software too. Please check it out on our website. So thank you for watching. We've covered a lot of ground. I've several more videos which go to various charity finance topics, which I'll hope you find interesting too. Please raise your comments in the section below and subscribe if you'd like to hear more. Thank you again, and cheers for now. Bye.